Warning! You're about to experience Metamodernism Uncensored, a podcast for diagnosing the cultural rot of the postmodern world and searching for real truth. It's time to question everything, especially yourself.
Welcome to Metamodernism Uncensored.
Glad to be here for this one, honestly.
Yeah, so let's start with a really basic scenario, right? If you or I borrow money to pay off a credit card, like using another credit card, we just go bankrupt.
Right, yeah. And you basically ruin your credit score for, a decade at least?
Exactly. But if you run a massive corporate entity that uses billions of dollars of new investor money to pay dividends to old investors,
Then you might just make the cover of a major financial magazine.
it's wild. So today, our mission for you, the listener, is to really explore that incredibly blurry, highly subjective, and honestly, arm and completely farcical line between catastrophic financial fraud and celebrated financial genius.
It's a very thin line, as we're going to see.
It really is. And to do this, we are looking at a stack of sources today that span from the totally absurd to the deeply academic.
Yeah, it's quite the mix. We've got a satirical letter written directly to the SEC, for starters.
Right. And then a really detailed breakdown of MicroStrategy's highly controversial new preferred stock called Stretch, ticker symbol STRC.
Plus an essay by the Nobel laureate Milton Friedman where he analyzes the hidden mechanics of Social Security.
And we cap it all off with an exhaustive historical accounting of Ponzi schemes throughout human civilization.
It is definitely a reading list that forces you to question your fundamental assumptions about what money actually is.
Seriously. And more importantly, how the rules completely change depending on who is actually holding the ledger.
Exactly. It's all about who gets to write the rules.
Right. But before we dive into those ledgers, I need to make a very clear, unequivocal impartiality disclaimer to you, the listener.
Yeah, this is super important for today's deep dive.
It is, because today's sources contain some highly politically charged critiques of both major corporate structures and government programs, specifically, the U.S. Social Security system.
And we really need to explicitly clarify that neither of us are endorsing these viewpoints, right?
Absolutely not. We are not taking sides, and we are certainly not making political statements here. We are simply reporting impartially on the ideas contained in the original source material.
Our focus today is strictly on the underlying mathematical and, psychological mechanics being described.
Right. We're looking at the engines of these things, not the politics. And we're explaining this because it genuinely matters to you.
Yeah, we are operating in an era of just absolute information overload right now.
We really are. We're navigating what some economists call a post-reality market environment.
Which is a terrifying phrase, honestly.
It is. But in this world, understanding the actual mechanics of these systems is the ultimate shortcut to being well-informed and, protecting your own assets.
Because when the lines between an illegal scam and a foundational economic institution start to blur, you really need to know how to read that blur.
Exactly. And to help us read that blur, we're going to start with this piece of just brilliant, biting satire. It's a letter written by a guy named Dempsey, addressed directly to the SEC.
And he wrote this entirely as a joke, really.
Oh, completely. It's a joke to draw attention to what he views as this massive hypocrisy.
The idea that the MicroStrategy Ponzi scheme, as he calls it, is operating in broad daylight under SEC oversight.
Right. While the U.S. government's own Social Security system, which he also calls a Ponzi scheme, is literally mandated by the state.
Utilizing satire to expose institutional blind spots like this is a literary tactic with really deep roots.
Oh, totally. Reminds me so much of Jonathan Swift.
Yes, like his satirical petition to the Candlemakers Guild.
Exactly, where Swift was trying to get the government to make sunlight illegal.
Right, to protect the domestic candle industry from the quote-unquote unfair competition of the sun. It's the exact same flavor of absurdity.
It really is. Dempsey is presenting this outrageous proposal to force the reader to look at a reality they usually just accept without questioning.
So are you going to read it?
I am. I'm going to read the beginning of this letter in full because it just sets the stage perfectly. I was honestly cracking up when I first read this.
So good. Go for it.
Okay, here's how Dempsey starts his letter to the SEC. Quote, "To the most exalted lords, commissioners, high priests, and keepers of the everlasting definition of fraud, the Venerable Securities and Exchange Commission."
Keepers of the everlasting definition of fraud. That is just brutal.
Right. He continues, Quote, I write today with a humble plea that I fear has been overlooked by your otherwise flawless administration of financial justice. I shall cut right to the proverbial chase. Would you humbly and kindly please legalize what has colloquially come to be known as Ponzi schemes?
Just asking straight up for legalized Ponzi's?
Yeah,
Love it.
it gets better. Quote, these laudable and sophisticated instruments have gotten a very bad rap by the elite class of unintelligent and myopic finance adjudicators of yesteryear. However, I believe the venerable Ponzi system simply needs a new marketing department.
A new marketing department. Because the math is fine, it's just the branding that's wrong.
Exactly. He says, quote, it works just fine. It has for decades. For as your own department has already demonstrated, through your actions, they become perfectly acceptable once the correct people perform them.
Wow. He is not pulling any punches there.
Not at all. Quote, for years, I and other uneducated staffs foolishly believed that paying earlier investors with money supplied by later investors was considered a species of deceit or outright fraud. I even labored under the quaint impression that the Securities and Exchange Commission took a dim view of such tawdry arrangements.
Tawdry arrangements. He really has a way with words.
He does. Quote, imagine my delight to discover that this prohibition is not universal at all. Rather, it appears to operate in the light of day and is routinely sanctioned for use and encouraged by your very organization.
And here comes the pivot to Saylor, right?
Yep, here it comes. Quote, the revelation came while observing the astonishing career of financial magnate Michael Saylor, whose incredible genius has consisted largely of convincing investors that borrowing money to buy more Bitcoin in order to convince still more investors to buy securities backed by borrowed money to purchase still more Bitcoin is not merely finance, but civilization itself.
That is a staggering sentence, and mathematically kind of accurate to what's happening.
It's wild. He says, quote, one must stop and applaud such raw, unadulterated elegance. His latest financial creation, STRC, appears positively revolutionary.
Revolutionary because of the sheer audacity of the structure.
Right. Quote, here at last is an investment vehicle openly discussing shareholder distributions while continuously raising fresh capital. Lesser men might become confused and ask whether there exists any philosophical distinction between such an arrangement and the investment structures your agency has spent 90 years prosecuting.
Lesser men might become confused. That's hilarious.
Right. Quote, thankfully, wiser men and financial geniuses all assure us there is. The difference, I gather, is simply typography. For if the prospectus is printed on sufficiently expensive paper and fawned over by countless CNBC hosts, the mechanics become innovation.
The mechanics become innovation. That is the core thesis right there.
And here's the kicker for this first part. Quote, yet should the same arrangement be executed by a fellow named Steve operating out of his basement in New Jersey, it immediately becomes 25 years in federal prison. The transformation is truly miraculous, end quote.
What's fascinating here is how Dempsey tightly focuses his aim.
Yeah, he really hones in on it.
He is specifically targeting only these two examples, right? MicroStrategy and Social Security. He's not attacking the larger financial system or like standard banking.
No, he's keeping it very specific to make his point.
Right. He argues that some Ponzi's are vilified and their creators jailed like Bernie Madoff, while others are just hailed as financial geniuses like Michael Saylor.
Okay, let's unpack this, because the humor is fantastic and that Steve in New Jersey line is gold. But is there actual validity to Dempsey's humorous claim here?
You mean the claim about the marketing?
Yeah. Is the only real difference between jail time for running a Ponzi and being called a financial genius just having the right marketing and PR department?
Well, to answer that, we have to look objectively at the actual mechanics of Saylor's MicroStrategy, specifically this STRC preferred stock.
Right, based on the Benzinga and A-Invest sources we reviewed.
Exactly. So MicroStrategy is ostensibly a software company, but Saylor essentially transformed it into a Bitcoin holding company.
And the mechanics are wild. They use borrowed money to buy Bitcoin.
Right. And then they issue this preferred stock, STRC, to raise more money.
And just to clarify for everyone, preferred stock is basically a stock that pays a fixed dividend, almost like a bond, right?
Exactly. So they issue STRC, take those proceeds, and buy even more Bitcoin. And meanwhile, they have to pay these massive dividends to the STRC shareholders.
So they're using new investor money to pay the old investors their yield.
That is exactly why critics like the crypto analyst Donald and Peter Schiff are calling this the quote-unquote worst Ponzi.
Worst Ponzi. That's a strong accusation.
It is. Donald has this theory he calls the death loop because STRC is pegged to a par value of $100.
Okay, so what happens in this dash loop?
Well, if the crypto market drops, the value of MicroStrategy's Bitcoin drops, and STRC depegs. It falls below that $100 mark.
Right, so Saylor would have to defend it.
Exactly. He'd have to sell some of their Bitcoin below his average cost to repeg the stock. But selling that much Bitcoin pushes the broader market price even lower.
Which just forces more sales. It sounds like a financial Jenga tower.
A Jenga tower.
Yeah, like where you pull blocks from the bottom to build the top. You're just hoping the tower gets so tall that gravity just magically stops applying.
That is a perfect analogy, honestly. And the A-Invest source details a very specific contractual trigger where gravity kicks in.
Oh, right, the $95 trigger. Let's talk about that.
Yeah, so if STRC slips below $95, meaning it depegs by just 5%, the dividend they are legally required to pay automatically rises.
And how much does that add to their costs?
Roughly $53 million in new annual costs instantly.
Wow, just from a $5 dip.
Right. And they're already paying an 11.5% dividend rate on this. Now, they do have buffers, a $2.25 billion reserve, and they've paid out $413 million in distributions so far.
But if the market really turns against them, that reserve burns fast.
Very fast.
But we have to be fair here and represent Saylor's defense, right? He addressed this directly at the BTC Prod conference.
He did, yes. He argues that refusing to sell Bitcoin in a downturn would actually collapse the equity.
Right, because if the equity is worthless, they can't raise new capital.
Yeah.
And STRC collapses anyway, so he sees his strategy as a shock absorber.
Exactly. He points out that they bought 250,000 Bitcoin, but they've only ever sold 32.
32 out of 250,000. That's his defense against the death loop, that his selling wouldn't actually crash the market.
Right. But Dempsey's letter doesn't just stop at corporate mechanics. He takes aim at the federal government next.
He sure does. I'm going to read the middle section of his letter in full now, because this is where he just abandons all subtlety.
Oh, this part is amazing.
Quote, "Yet even Mr. Saylor's accomplishments pale beside the financial ingenuity of our own federal government."
He's going right for the government's throat here.
Literally. Quote, "Permit me to congratulate Congress on operating the largest and most respected Ponzi arrangement in human history without once suffering the inconvenience of a subpoena."
Without a subpoena. Because they write the laws.
Exactly. Quote, "This, if nothing else, should invariably prove without a doubt the wonder and staunch skeleton of this proven investment framework."
Staunch skeleton.
Quote, "Every working generation faithfully contributes so that the previous generation may receive its promised benefits, all upon the understanding that an even larger generation shall someday arrive to finance them in turn."
Which is the literal definition of the mechanic we've been talking about.
Right. Quote, "And whenever demographics become inconvenient, we simply borrow. Whenever borrowing becomes inconvenient, we simply promise that future taxpayers will display greater enthusiasm than present ones."
Greater enthusiasm. That's a very polite way of saying higher taxes.
Totally. Quote, "Whenever that becomes inconvenient, we appoint a commission. I fail to see the problem."
We appoint a commission. That is so accurate it actually hurts.
Quote, "Indeed, if the Social Security program is routinely defended as perfectly legitimate whenever anyone dares compare it to a dreaded Ponzi scheme, then I can only conclude that the true offense was never the mechanics."
And here's the punchline.
Quote, "The offense was simply insufficient political influence and piss-poor marketing." End quote.
If we connect this to the bigger picture, Dempsey isn't just making a wild fringe joke here.
No, not at all. Our sources back this up with some serious economic theory.
Right, like the 1999 Hoover Institution essay by Nobel laureate Milton Friedman.
Milton Friedman.
Yeah.
You can't get much more mainstream economics than that.
Exactly. And Friedman explicitly outlines how Social Security literally works as a Ponzi scheme.
Break that down for us, because
Mhm.
people get really defensive about this.
They do, but mathematically, it operates on a pay-as-you-go system. The taxes paid by today's active workers are immediately used to pay today's current retirees.
But wait, I have to push back here. Isn't there a trust fund? Like, people genuinely think they are paying into a giant savings account for themselves?
That is the narrative, yes. But Friedman completely deconstructs that trust fund fiction.
So what's actually in the trust fund vault?
It's essentially an accounting trick. When there's surplus cash, the Social Security Administration, quote-unquote, buys special treasury bonds.
Meaning they hand the cash to the rest of the government to spend.
Right. The Treasury spends it on roads, defense, whatever. The trust fund is simultaneously an asset to Social Security and a liability to the Treasury.
So it's just an IOU from one pocket of the government to the other.
Exactly. The assurance of future benefits relies entirely on future Congresses honoring those promises by either raising taxes or printing money.
Which Friedman noted, right, like he talked about how supporters call it a quote-unquote compact between the generations.
Right, while opponents just look at the math and call it a Ponzi scheme. And Friedman's numbers from back in 1999 were staggering.
What were the numbers?
He calculated an unfunded liability of somewhere between $4 trillion and $11 trillion.
Wow. And that was 25 years ago.
Exactly. The math only gets worse as demographics shift.
So we keep throwing the word Ponzi around. Let's
That's
actually
all.
define the crime here.
Just do it.
According to investor.gov, which is the government's own site, a Ponzi scheme is an investment fraud that pays existing investors with funds collected from new investors.
It requires a constant flow of new money to survive.
Right, so knowing that, let's take a historical tour using our Wikipedia source, because this clearly isn't just a modern crypto thing.
No, this is deeply embedded in human nature. Let's go back to the origins.
How far back?
The 1870s. A woman named Sarah Howe ran the Ladies' Deposit Company in Boston.
The Ladies' Deposit Company. That sounds incredibly Victorian.
It was. She specifically targeted unmarried women, promising them an 8% monthly interest rate.
8% a month? How did anyone believe that?
She claimed it was backed by an anonymous Quaker charity. She created a closed ecosystem where early investors actually got paid out, so they recruited their friends.
Wow. But it inevitably collapsed, right?
Of course. And then we moved to the 1880s with Ferdinand Ward.
This one is crazy because of who he tricked.
Right. Ward tricked Ulysses S. Grant, the former president, to the tune of $17 million.
$17 million in the 1880s.
He had a brokerage firm with Grant's son. He lost their money on bad trades, and instead of admitting it, he just started taking new investor money to pay the older investors, claiming he had insider government access.
So he didn't even start out trying to run a scam, necessarily?
No, he was just trying to cover his losses, and the math just swallowed him whole.
And then, of course, the namesake himself, Charles Ponzi in 1920.
Right. Ponzi promised to double people's money in 90 days.
Which he claimed he was doing through postal reply coupons, right? Like an arbitrage scheme.
Exactly. Buying cheap coupons in Italy and trading them for expensive stamps in the U.S.
The narrative was so good.
It was. He raised $8 million from 30,000 investors in just months. But the logistics were impossible, so he just started paying the old investors with the new money.
So those are the individual scammers. But our sources show the scale of this gets so much worse.
Terrifyingly worse. Look at the Albanian pyramid schemes in 1997.
Right. They were transitioning out of communism.
And the population had no idea how modern finance worked. Huge portions of the country invested. And when it collapsed, it literally caused a national rebellion.
A rebellion over a Ponzi scheme.
Yes. And the Russian MMM scheme, during the same era, up to 40 million people lost roughly $10 billion.
10 billion. And then we hit the modern era, Bernie Madoff, obviously.
Right, a $65 billion collapse.
But the crypto era is where it gets so blatant. BitConnect, for example.
Oh, yeah. And Trendon Shavers, who ran the Bitcoin Savings and Trust, he amassed 700,000 Bitcoin just by promising a 7% weekly interest rate.
700,000 Bitcoin.
Yeah.
And then the Celsius network collapse.
That's the one that really mirrors what Dempsey is talking about.
Because of that internal memo, right?
Exactly. During the Celsius bankruptcy, investigators found an internal memo where an employee literally referred to his own title as Ponzi consultant.
So what does this all mean? Look at these historical examples. Sarah Howe, Ferdinand Ward, Ponzi, Madoff, the Celsius guys.
What do they all have in common?
They all ended up in prison. Or worse, the system eventually punished them.
Right.
Yet Dempsey argues that if you do the exact same math under the guise of quote-unquote capital formation or a government compact, it's perfectly legal.
Which brings us to the end of his letter, his proposal for a post-truth economy.
Let me read this final section in full well, because it's his masterpiece. Quote, "This profound discovery has liberated me."
Liberated him.
Quote, "For I no longer wish to build services that add value. I no longer wish to invent products which improve society. I no longer wish to improve civilization through trite mechanics like labor or skill."
Trite mechanics like labor. God, that's funny.
Quote, "I merely seek permission to become systemically important like the wealthy and politically connected do."
He wants to be too big to fail.
Exactly. Quote, I therefore propose to you, wise keepers of our financial apparatus, a simple licensing regime. Please consider this for immediate enactment to help produce unimaginable wealth for our beloved country and for those who wish to improve upon it further.
Okay, here come his rules for a legal Ponzi.
Quote, any citizen wishing to operate what was formerly known as a Ponzi scheme should merely satisfy the following conditions. Raise no less than $1 billion.
Because if it's small, it's a crime. If it's a billion, it's an institution.
Right. Quote, employ at least 3 former regulators. Replace the phrase, new investors pay old investors with capital formation supports shareholder yield.
Capital formation. Just change the label.
Quote, refer to every obligation as a strategic allocation. Mention Bitcoin no fewer than 17 times.
Naturally.
Quote, add AI to the investor presentation regardless of relevance. Ensure that at least 2 cable news anchors describe the founder as visionary.
That checklist is honestly too accurate, it hurts.
It really does. Quote, upon satisfying these modest requirements, the applicant shall receive an official certificate of regulatory enlightenment, certifying that arrangements formerly condemned as fraudulent have now ascended into the exalted realm of financial innovation.
Certificate of regulatory enlightenment. Amazing.
Quote, should any skeptic question the enterprise, the Commission need only issue its customary reassurance. This is fundamentally different.
This is fundamentally different. That's what they always say.
Right. Quote, no explanation need follow. The phrase has performed admirably for bubbles, leverage, sovereign debt, internet stocks, mortgage-backed securities, cryptocurrency, and every other episode in which arithmetic briefly surrendered to enthusiasm.
Arithmetic surrendering to enthusiasm. That is the quote of the episode.
Truly. Quote, it surely has many years of useful service remaining. In closing, I ask only for equality before the law.
Just let Steve in New Jersey run his Ponzi.
Quote, if these financial architectures become respectable when practiced by billionaires, investment banks, or the federal government itself, then justice demands that the same privilege be extended to ordinary Americans. Surely equal protection under the law requires nothing less. Your humble and obedient servant, Sean M. Dempsey, Esquire. End quote.
It's just brilliant, and it perfectly encapsulates this postmodern world we live in.
Let's talk about that. What do you mean by a postmodern economic world?
Well, historically, economics was anchored to reality. Cash flows, physical assets, verifiable math.
Right, the modern era.
But in a postmodern, post-truth economy driven by populism, the narrative itself, the marketing, the collective belief is treated as more real than the underlying math.
So if enough people believe the STRC narrative or the Social Security Trust Fund narrative, the math almost doesn't matter.
As long as the belief brings in new capital, the math works. The narrative is the asset. But this raises an important question, doesn't it?
What's that?
Are these systems doomed? Like, let's look at 2026. Is MicroStrategy and their stretch equity doomed to go bankrupt?
Right. What if there's a prolonged crypto winter? What if that $95 trigger hits and stays there?
If the narrative breaks and the new capital stops flowing, that dividend spiral becomes unsustainable. The death loop becomes real.
And what about the federal side? Is Social Security doomed?
According to Friedman's math, yes.
Because without massive new generations of workers, the math eventually just collapses into massive debt or tax hikes.
Exactly. The underlying reality of demographic decline will eventually overpower the political narrative.
So what are the metamodern takeaways for us in 2026? Will reality eventually catch up to these architects of postmodern economic populism?
Or will the sheer scale of collective belief allow these systems to survive for many more decades? I think the metamodern takeaway is learning to navigate a world where the line between a scam and an institution is simply a matter of consensus and scale.
Wow. Well, I want to thank you, the listener, for joining us on this deep dive into the absurdities and realities of modern finance.
It's been quite the journey today.
It really has. And I want to leave you with one final thought. If the only real difference between an illegal fraud and a foundational pillar of our economy is the size of the marketing budget and the blessing of a regulator, when you look at the investments in your own portfolio, how do you really know what you're holding? Keep questioning everything and keep learning.
Well, that was today's episode, Metamodernism Uncensored. Thank you for joining, and we'll see you again